I bought silver this morning in New York for $80 an ounce. Shanghai paid $90 for the same metal. $10 gap. That gap doesn't narrow. It explodes. January 1st is 48 hours away, and that's when the 10 becomes 50, then 100, then you can't get it at any price. And if you're holding paper when that happens, you're holding nothing. What I'm giving you right now rewrites everything you thought you understood about how commodities actually move. China doesn't just mine 60 to 70% of global silver. They control the supply, the physical flow, refineries to factories to vaults to your hand, that entire chain. And in 2 days, they're not slowing it down. They're installing a licensing wall so narrow that only firms hitting 80 tons annually get through. You know how many refineries that kills? Nearly all of them. The global silver market has been bleeding 2,500 tons every year since 2021. Demand sits at 1.24 billion ounces. Supply is 1.01 billion. That's a 230 million ounce hole we've been filling by draining every vault we can reach. COMEX registered just dropped 1.42 million ounces. JP Morgan down 597,000. Shanghai Gold Exchange inventories hit a 10-year low in November. We've been living on borrowed metal, and the loan just got called in full. That $90 price in Shanghai isn't speculation. It's panic. Chinese manufacturers know what's coming. They know their government is locking exports on January 1st to feed their solar factories, their EV plants, their semiconductor lines. China is the largest refiner and the largest consumer. They need every ounce for their energy transition, and they've decided the rest of the world gets nothing. This is not financial advice. I'm not licensed. I'm not telling you to buy or sell anything. I'm connecting patterns the mainstream either can't see or refuses to report. The data comes from official exchanges, government announcements, market reports. Verify everything. Research everything. Decide everything yourself. This is a framework, not instruction. If this information matters to you, if you want to stay ahead of what's coming, subscribe right now, because the next 48 hours rewrite the entire commodities map. Drop a comment. Tell me if you're holding physical silver or still watching. Let's see where everyone stands. Why would China strangle their own export revenue? Because this isn't about money. It's about power. It's about the future. Silver is the most conductive element on Earth. Every solar panel needs 64 ounces. Every EV needs 25 to 50 grams. Every smartphone, every AI server, every 5G tower. Silver. No substitute exists. You cannot build a solar panel without it. You cannot mass produce electric vehicles without it. Whoever controls silver supply controls the energy transition. China understands this. October. China exported 660 tons of silver. Record monthly export. Everyone celebrated. They said, look, plenty of supply. China's flooding the market. That wasn't supply. That was the final flush. China emptied the warehouse before slamming the door. They sold at 30, 40, 50. Locked profits. Now silver is at 80 and they're cutting the tap. See the trap? They dumped inventory at lower prices, made everyone comfortable. Now they're pulling the floor. October 30th, 2025. China's Ministry of Commerce made the announcement. January 1st, 2026, all silver exports require government licenses. Only companies producing at least 80 metric tons annually qualify. Only firms with $30 million credit lines. Only state-approved entities. This isn't a quota. This is a chokehold. Small and medium refiners that move silver freely are finished. Out. And the big state-controlled firms answer to Beijing, not the market, not you. The Chinese Communist Party. You're thinking the market will adjust. Other countries will fill the gap. Let me destroy that hope. The global deficit is already 2,500 tons per year, with China exporting freely. Analysts project once restrictions take full effect, the deficit doubles. 5,000 tons annually. Where does that metal come from? Mexico is the largest producer, but they refine most of their door bars in China. Peru, same. Australia produces 15% of global output, but they can't scale fast enough to fill a 5,000-ton hole. Supply chains don't work like that. Years to build refineries, decades to open mines. And while we debate supply curves, industrial users are hoarding. Samsung just locked a 10-year supply contract with a mining company. BYD is exploring silver-based solid-state batteries and securing offtake agreements. First Solar, the largest solar panel manufacturer in the United States, is negotiating directly with mines because they can't rely on spot markets anymore. When the giants bypass the supply chain, the system is broken. This is where it turns dangerous. The price you see on your screen, that 80 on COMEX, is a ghost. A number from futures contracts, leverage, paper promises. The real price, physical metal you can hold, is 90 in Shanghai, $10 premium. Normal markets close that gap in hours. Arbitrage traders buy in New York, ship to Shanghai, sell for profit. That's not happening. You know why? No metal to ship. Vaults are empty. Refineries halted. Supply chain paralyzed. Let me show you the trap hidden in the mechanics. Most people think a refinery loves high prices. They don't. Refiners hate volatility. Here's how they operate. They buy raw door bars from a mine. 1 million ounces. Takes 2 weeks to a month to refine. During that time, they're terrified the price drops. If they buy at 80 and it drops to 60, they lose 20 million. So they hedge. The moment they buy physical or they short equivalent paper silver on futures. 1 million ounces physical, 1 million ounces paper short. Perfect hedge. Price goes down, they lose on physical, but make on the short. Price goes up, they make on physical, but lose on the short. Delta neutral. They profit on refining fees, not price movement. This works when silver moves $1 a day. Works okay at $5 a day. What happens when silver moves 15 in a week? What happens when it gaps 10 overnight like December 26th? Margin call. The refinery holds physical metal, but that metal sits in a furnace. It's not cash. Their short position on futures is losing millions by the hour as price rockets to 80. The exchange doesn't care they have physical. They want cash now to cover the paper loss. This is the nightmare. The refiner is technically solvent, but illiquid. So what do? They stop buying. Stop buying raw ore from mines because they can't afford a new hedge. If they stop buying ore, they stop producing bars. If you're finding this valuable, leave a comment right now. Tell me, did you know about the hedging trap before this? Hit subscribe if you haven't. We're going deeper. This is why supply chain froze. High price blew up the hedging mechanism that allows supply to function. It's a paradox. The higher the price goes, the less silver gets produced. We are at 80. Capital requirements to hedge at 80 are 4 times higher than at 20. Margin calls 4 times larger. Refineries bleeding cash just to stay hedged. So they've done the only rational thing. Stopped. Until volatility calms, until price stabilizes, they will not produce a single bar. We are looking at global production freeze at the exact moment of maximum demand. Now, J.P. Morgan. If there's a villain, it's them. For over a decade, J.P. Morgan held the largest short position in silver. They manipulated price down through futures. Got caught. Paid $920 million in fines in 2020 for precious metals manipulation from 2008 to 2016. Didn't stop. Got smarter. Then something changed. June to October 2025, J.P. Morgan reportedly closed their entire 200 million ounce paper short. Didn't go neutral. Went long. Massively long. They allegedly hold over 750 million ounces of physical silver now. That's not a position. That's a monopoly. 40% of all COMEX futures contracts. Nearly a year of global mine production sitting in their vault. J.P. Morgan knew. They knew China would restrict exports. New supply chain would collapse. New price would explode. So they flipped from suppressing price to cornering the market. Now with China cutting 60 to 70% of global supply, J.P. Morgan sits on the largest silver hoard in history. When shortage hits, when industries are desperate, who do they call? J.P. Morgan. And J.P. Morgan names their price. But here's the twist. Thanksgiving night, November 28, 2025. COMEX experienced 10-hour trading halt. Blamed it on cooling system failure at their data center. Cooling system. During massive silver rally. Same night, 13.4 million ounces moved from registered, that's deliverable, to eligible, non-deliverable status in J.P. Morgan's warehouse. Coincidence? The largest commodities exchange just happened to have technical malfunction during the most volatile session in years? Or someone needed time to reposition, move metal off delivery board so they wouldn't have to hand it over? Late 2025, J.P. Morgan moved their entire precious metals trading desk from New York to Singapore. Why? Singapore has looser regulatory oversight. They're positioning outside CFTC reach, outside Congress, outside anyone who might ask uncomfortable questions about their silver position. This is not normal business. This is a bank preparing for war. This is no longer theoretical. We are entering the unobtainium phase. Unobtainium is engineering terminology for a material perfect for the application, but impossible to get. When a commodity becomes unobtainium, the price doesn't rise 10%. It doubles, then doubles again. We saw this with rhodium in 2020. Rhodium is used in catalytic converters. Supply tightened. Auto manufacturers panicked. Price went from $2,000 an ounce to $29,000. 14 times increase. Why? Car companies needed it. If they didn't have rhodium, they couldn't sell the $50,000 car. Paying $29,000 for an ounce of dust was a bargain compared to shutting down the factory. Silver just entered this phase. Think about solar industry. A photovoltaic factory runs 24/7, costs billions to build, employs thousands, has contracts with governments to deliver gigawatts. If silver paste runs out, factory stops. Workers go home. Contracts breached. Stock price collapses. Government fines them. So what is the procurement manager at First Solar doing right now? He's looking at the screen. Sees 80. Calls his supplier. Supplier says no inventory. Does he say, oh well, guess we'll wait? No. He screams. He says, I don't care what the price is. Find it. Calls competitor. Calls vault in London. Calls private hoarder. Offers 90. They say no. Offers 100. No. Offers 120. Finally, someone says yes. That's how price jumps 80 to 120 overnight. Not speculation. Existential panic. Retail investors feel FOMO. Fear of missing out. Industrial users feel FODO. Fear of dying out. FODO is stronger than FOMO. Right now, every major industrial user of silver is in FODO mode. Samsung, LG, Tesla, BYD, scrambling. Some reportedly approaching mining companies directly to buy run-of-mine production, offering to finance mines in exchange for guaranteed delivery. Ultimate sign of unobtainium. Supply chain being rewritten in real time. If you're still watching, you're in the top 1% who understand what's happening. Most people wake up in 6 months wondering why solar panels cost twice as much. You won't be one of them. Subscribe and drop a comment. What do you think happens next? Does silver hit 100, 150, 200? I want your predictions. Price targets. Despite halted refineries, despite China's restrictions, despite J.P. Morgan's monopoly, we can map the road. We're at 80. Stage 1 is gamma squeeze. 80 to 100. Happening now. Millions of call options sitting at 85 and 90 strikes. Market makers sold those thinking they'd never pay. As price rises, market makers hedge. Buy futures to cover options. Higher it goes, more they buy. Gamma, self-reinforcing loop. This squeeze pushes rapidly through 80s into 90s. I expect 100 within 10 trading days. Stage 2 is media mania. 100 to 125. At 100, silver makes nightly news, not just CNBC. 6 p.m. news. Silver hits record high. Grandma's silverware worth a fortune. Public herd arrives. People who know nothing about deficits or JP Morgan, they see line going up, raid pawn shops, buy ETFs, call brokers asking for exposure. This wave of capital is massive and dumb. Momentum-driven, emotional, pushes price 100 to 125 on sheer greed. Stage 3 is industrial capitulation. 125 to 150 plus. At 125, industrial users realize price isn't coming back down. Temporary surcharge on products becomes permanent. They stop fighting price, start panic ordering. Issue corporate bonds to buy silver. Take loans. Liquidate assets. Institutional buying power is enormous. Grinds price up day by day. 130, 135, 140. Then we hit psychological barrier. 150. Why? At that level, silver more than doubled from today. Gold to silver ratio collapses under 50 to 1. Silver is no longer side bet. Premier asset class. Roadmap is clear. Gamma squeezes to 100. Public mania drives to 125. Industrial panic takes to 150 and beyond. Won't be straight line. 20% corrections. Days of terror. But destination locked by deficit and China's restrictions. Once this starts, it doesn't stop cleanly. We have to talk about regulatory hammer because the empire strikes back. Do not think Federal Reserve and CFTC let silver go to 150 without a fight. They lost market war. Now regulatory war. Here's their playbook. Tactic 1. Margin nuke. CME announces emergency hike in margin requirements. Right now, costs may be $10,000 to control futures contract. They'll raise to $50,000 or $100,000. Force small speculators out. They want you to sell because you can't afford deposit. But here's corruption. They'll exempt commercial hedgers. Banks. JP Morgan stays long. You can't. Rigged. Tactic 2. Position limits. CFTC declares market emergency. Says speculators distorting price. Caps how many contracts any entity holds, but banks get waivers. You're limited. They're not. Tactic 3. Windfall tax threat. Politicians go on TV. Say hoarders holding green energy transition hostage. Propose taxes on precious metal sales. Try to scare you into selling. Tactic 4. ETF cash settlement. Watch SLV, issues silver trust. They might change prospectus overnight. Say for fund stability, we're suspending new share creations. Disconnects ETF from physical price. ETF trades 70 while physical is 90. Passive investors trapped. When these headlines hit, and they will, price might dip. Silver drops 90 to 80 in an hour. Media screams bubble burst. Do not fall for it. Regulations cannot create silver. Margin hikes cannot mine silver. Taxes cannot refine silver. They kill paper demand. Do nothing for physical shortage. Make it worse. Tax it. People hide it. Ban speculation. Price discovery moves to black markets. Silver price is not determined by CFTC anymore. Determined by deficit. Unless they conjure 5,000 tons from thin air, they're powerless. When hammer drops, view it as death rattle. Desperation, not strength. And this window is already closing. Most important question. The one nobody asks until too late. When do you sell? You've held for years. Watched it go to 80. If it goes 150, do you sell? Here's my answer. You don't sell silver for dollars. Why trade scarce asset on earth for currency being printed into oblivion? If silver is 150, it means dollar has collapsed. Selling for cash is buying a burning ticket. How do you profit? Use swap. Play ratios. Strategy 1. Gold swap. When gold to silver ratio drops below 40, meaning 40 ounces silver buys 1 ounce gold, you swap. Trade volatile silver for stable gold. Lock purchasing power without going back to fiat. Multiply gold stack for free. Strategy 2. Asset swap. Trade silver for land, rental property, business. Move from defensive wealth to productive wealth. 1980, you could swap roughly 800 ounces silver for average American home. Today at 80, that ratio is skewed. But at 150 or 200 ratio comes back. When you can buy house for monster box of silver, that's when you exit. Not for numbers on screen, but tangible productive assets. We are living through history. Saturday, December 28, 2025. 2 days before restrictions hit. 2 days before China locks the door. Global deficit came due. For those who prepared, for those who listened when we warned at 30, you're safe. You're your own central bank. For those still on sidelines, window isn't closing. It's welding shut. You might find a few ounces here and there. Might get lucky at coin shop. But era of easy silver is over. We're in era of unobtainium. Do not let volatility shake you. Do not let headlines scare you. Do not let paper prices distract from physical reality. Banks lost. Industry panic buying. Price seeking true level. Hold the line. Protect your stack. Subscribe because we're covering every move over next 48 hours and beyond. This is greatest wealth transfer in modern history.